Property boom back already. Imagine waking up a year from now and realizing 2025 was the year you should have bought property. You'd kick yourself, right? Well, the signs are emerging that a property super cycle might be forming in Australia. And if you're sitting on the sidelines, you could miss out. Prices are creeping up to record highs, auctions are buzzing, and even the Reserve Bank is hammering us with rate hikes to cutting rates. It's a wild turnaround. Today we are cutting through the noise and giving you the clarity you really need on what's happening and how you can take advantage. I'm Rish and welcome to our channel Secure Future with Devy and Rish, where we speak about property investing, mindset and life. Today we are tackling the questions on everyone's mind. Is there another property boom really on the way? More importantly, what should you do? Grab a coffee and let's dive in. So let's first look at the market context. Why is everything changing now? Just a year or two ago, the property move was pretty grim. Interest rates were shooting up like a space rocket, borrowing money felt like torture, and buyers were nervous. Fast forward to now, and the vibe has done 180. What's changed? First big change is that the interest rates, for the first time in years, the RBA is actually cutting it sequentially and not hiking them. In fact, RBA just delivered its third rate cut this year, bringing the cash rate down to 3.6%. That's down from the peak we saw in 2023. Lower rates means cheaper mortgages and higher borrowing capacity, which is already sparking buyer appetite. Think of it as RBA was handing out little boosters to the market. Each cut is a shot of adrenaline for property demand. Secondly, the property market itself has perked up. After a brief slump, home values are rising again and even hit record highs. Home prices just hit a new peak, around $827,000 after rising about 0.3% last month and 4.9% over the past year. Every capital city is climbing again. The laggards like Darwin and Tassie are also seeing solid gains. So if you felt property prices have stalled out, well, surprise, they're on the move. And get this, auctions are suddenly hot again. Not long ago, sellers were struggling for bids, the highest in over a year. Melbourne is back on the news again, and for Melbourne, the auction clearance rates have been above 70% 9 weeks straight. That's a significant streak. One auctioneer in Sydney said that earlier this year, you'd see probably only 2 or 3 bidders turn up, but now he's getting 8, 10 or even 15 bidders registered for an auction. That's like turning a quiet open mic into a packed rock concert. It's telling us that buyer confidence is back, and maybe even a little FOMO, which is creeping in because of these drops and people's borrowing capacity suddenly seeing some light of the day. So in short, money is cheaper to borrow, prices are rising, and buyers are coming out of hibernation. But that's not all. Let's talk about why some experts, myself included, suspect this could be starting off something big, a sustained property upswing, or as I like to call it, property mega cycle. Here are the 4 reasons this mega cycle might be forming. So let's look at the 4 key reasons backed by data that Australia might be at the start of a major property upswing. Number 1, interest rates are dropping consistently. It's not just a one-off drop, it's dropping after every alternate RBA meeting. This is huge. After a painful stretch of rate hikes that squeezed buyers, the tide has turned. We've had 3 rate cuts so far, and more likely on the way. The official cash rate is down to 3.6%, and big banks are predicting even 1 or 2 further cuts over the next 6 or 12 months. Lower interest rates directly increase your borrowing power and reduce monthly repayments, which boosts buyer sentiment. Think of this as the last year the RBA was raining on the property parade, and this year is just handing out umbrellas and saying, go have fun. Cheaper money is fuel for property prices, especially in a place like Australia where the supply is so limited. In fact, the CBA economists note that a 1% drop in interest rates could lift the home prices to about 9 to 10% over time. Well, we haven't hit the 1% of total cuts yet. We are at 0.75 so far, but we are well on our way. Importantly, these cuts are already changing people's behaviors. People who had paused their search while rates were high are jumping back now that the mortgage. People are moving from slightly average houses to actually elevating their home experience. Investors are perking up after retreating during the rate spikes, and activity is on the rebound now. It's as if the property market has just been on pause and someone just hit play again. And before it starts fast forwarding, you have to take action. The number 2 reason is demand is surging. Demand meaning lots of buyers and more number of buyers. On the demand side, we've got a 1-2 punch. Australians are eager to buy again, and population is booming. Apart from all the negativity around migration, you've also heard that there is a lot of auction clearance rates. There are a lot of people moving into the country, and properties are getting snapped up even faster. Open homes are busier, rentals are busier, and good properties are receiving multiple offers. When you hear about 10 or 15 bidders at an auction, that's real competition, and it's often leading to rising prices. It feels like the 2021's frenzy is in some pockets. So why so many buyers? Partly because we have had a lot more people needing homes. Australia's population is surging again, and migrations opened up. And after the borders have opened up, Australia has added roughly 446,000 people in the past year alone. That is record breaking. We actually hit an all-time high, and we don't have the infrastructure to load it. Simply put, hundreds and thousands of people need a new place to live, whether renting or buying, and many of them flock into the major cities, adding huge demand for housing there. Population demand is scaling, and even if some of these people don't buy immediately, they rent. More people equal to more housing demands, full stop. Also, the labor market solid and pro migration. The wages are growing, albeit slowly. So many professionals in their 30s and 40s feel secure enough to consider buying because they spend considerable time in their workplaces and now have a steady source of income. People are getting skilled, and it's also skilled workers. All these factors mean buyers' pool is deepening. Demand is not a trickle, it's a rising tide. Number three, supply is tight. Not enough homes. If demand is rising like a tide, supply is a leaky boat. We simply don't have enough houses available, and that's a recipe for higher prices. Here's what's happening: fewer listings. A number of homeowners are not selling, likely because they expect prices to climb further. The data shows that advertised housing stock is up below the 5-year average as per levelfuturerent.com.au and about 5.8% lower than this time around. Far fewer properties on the market than usual, so buyers are fighting over scraps. But scarcity tends to tip the market in the seller's favor. So when there's one cookie and five hungry kids, you know the cookie's price is going to go up. The second problem is that there's a construction slump. You might think, why not just build more houses? But it's not fast enough. Building approvals are sluggish, well below what we need. In fact, monthly approvals are far short of the 20,000 new homes required to keep up with this population growth. We're coming off a construction slowdown from the COVID years, and high construction costs aren't helping. New housing supply is not keeping up with the demand. Core logic analysts warn that insufficient new housing is likely to put further upward pressure on prices at a time when affordability is already so stretched. In other words, supply crunch isn't ending tomorrow. Many owners are holding on to their properties because they anticipate better prices. And could you blame them? If you think that your home's value going to go up by 10% next year, you'd rather wait, right? This behavior further chokes supply, creating a feedback loop of low listings and rising prices on the other hand. All this means one thing: when lots of buyers chase very few properties, they actually end up paying a lot more for it, so prices get pushed up. It's basic economics, but it's also playing out in real time. One report noted that scarcity is creating a balanced market on paper, but realistically, it's a seller's market. So, translation: buyers don't have much leverage right now. Rents and yields are soaring. If you're an investor or thinking about becoming one, here's a sweet spot. Rental yields are the best they've been in the years. Rents went through the roof, partly due to the supply demand issues. Now, rental yields, that's the return you get on a property investment, have climbed to their highest level since 2019. Nationally, gross rental yields hit about 3.7 to 3.8% in early 2025, which is up from the low 3% a few years ago. In some cities, it's even juicier. Darwin is offering about 6.6%, with units up to 7.8%. Even Perth and Hobart are actually offering 4 to 5% yields, which means higher rental yields attract investors back into the market. It's not about just capital growth. Investors want to see decent cash flow. With interest rates off their peak and rents still rising, the math starting to look a lot more positive again for buying investment properties. In the first quarter of 2025 alone, national rents jumped 1.7%. That's just in 3 months. So not only are the yields rising, the rents growing faster than property values in some areas, improving the income side of property as well. Plus, rental demand is ferocious. Vacancy rates are super low. In some pockets, we've seen vacancy rates less than 1%. The headlines about rental prices is very evident, and that's why it gives you the power to hike rents. Strong rental returns, future capital growth gives you a compelling reason to invest. No wonder we are hearing that investors are back after a long time. They're seeing that opportunity. In summary, we've had lower interest rates, a surge of eager buyers, very few properties for sale, strong rental returns, and those are pretty ideal conditions for a sustained property boom. One property commentator said that this isn't a one-off spike, but a potentially start of a new property super cycle of sorts. It would not be a crazy post-COVID style boom, but a long, steady climb till these interest rates stabilize and people start getting used to the newer prices. What do you do as an investor? As an investor, when you see these property markets rising and when you're not taking action, what happens is it becomes even dearer to buy a property 6 months. We ended up paying $60,000 on a 460 property, and we would have just paid about 400,000 for that property. So the time value of money is extremely critical. So what you need to do if you're looking to invest in the market, and you should be with all these factors really looking, grab hold of a person, or get yourself inducted into the world of property investing by studying the right data, by studying the right metrics, and investing in yourself or investing in a mentor who actually helps you find that. If you're wanting some advice, please hit me up on the links and I'll be happy to help and get on a call. No obligations, just trying to figure out how we can navigate this property world together. If this video has made sense, please don't forget to like and hit that subscribe button. And so it gives me a lot of confidence to keep building and adding more videos every single month. This is Rish signing off, and I hope to keep adding more videos on this channel, which helps you build a secure future here in Australia. See ya.